My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to save you some money. My job is not just to entertain, but to teach. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Things have changed for the worse. There's a shroud now over this market, and you ignore it at your own peril. Even on a good day like this one, where the Dow dropped 81 points, but the S&P gained 0.3%, and the Nasdaq climbed 0.86%. Decent comeback from Friday's tsunami of selling. Sell. But really not an overwhelming one. So what's changed that has me turn much more cautious? Well, first, the stronger than expected employment report on Friday was awful for the bulls. Because the bulls desperately need 1 or 2 rate cuts this year to keep this market going higher. And you don't get rate cuts when the labor market's this solid. I always tell you that the non-farm payroll report is the single most important piece of data we get from the government. And that's because it has an impact on the Federal Reserve. On Friday, we got a surprisingly strong employment figure, certainly stronger than I was looking for. So strong that I think you could argue that we might actually need a rate hike to cool the economy, not a rate cut to turn the temperature up. Now, I am a huge believer in the late Marty Zweig's notion that you can't fight the Fed. When the Fed is raising rates, as I think they may have to, and you happen to be bullish, well, you're going to get steamrolled. That's where we are now. When the Fed's cutting rates, that's your green light to buy. That's where we were before last Friday. Simple idea, but it's maybe a lot of money over the years. So if rate cuts are now off the table, well, you have to get less bullish. Axiomatic, people. Axiomatic. Part of my enthusiasm for this market came from the fact that Kevin Warsh, the new Fed chief, clearly wants to cut rates. I love Jay Powell, responsible, smart, always doing his best in extremely trying circumstances. But I'm not going to complain when we got a replacement once the juice the economy sends the stock price up. Lots of people are all excited about the stock market and their home prices going up, too. But let's not forget, please, there's a huge percentage of people who know nothing about owning stocks or homes and are struggling to make ends meet. Many were hurting from inflation, including tariff hangover price increases, as well as less health care cost protection and a gratuitous cutback in food stamps. The boost in oil prices, though, was the straw that broke the underclass's back. It's too much to ask for them to bear these changes. I thought that a rate cut could be the beginning of a concerted effort to help these people. We know that when management at Walmart, Dollar General, Dollar Tree, and Five Below all talked about the stretched consumer, then them's the facts, right? I mean, you can't dispute them. But there's also no disputing the labor report, which showed that jobs are incredibly easy to get. And with all the inflation in the system, a rate cut is just not tenable. My biggest bullish prop is gone, at least for now. Just gone. Second, we have this gigantic IPO coming from Elon Musk's SpaceX, and it's reportedly oversubscribed, meaning it's unlikely to bomb. But what happens if it opens way too high? Simply because there's not enough stock to go around, and then we watch a sickening decline after that moment. Now, this is a scenario that could very, very well happen. We keep hearing about how the stock is well placed, right? Big chunk of it's with retail. But what if there are a host of market orders that come in over the transom and there's no stock to match the buyers? Well, that could quickly send the stock of SpaceX to ridiculously high levels, and that could be very bad. It would color things very negatively, maybe for some time. I don't think today's rally nullifies the possibility of something that could be very tough to watch. If that happens, there'll be a lot of negative press about the deal, and it would spoil the bullish plot, or at least what's left of it. Third change, that pullback in the stock of Apple today. Of the big cap stocks, Apple had been the cleanest story. It didn't have to spend big on artificial intelligence. They had Alphabet to do it for them, and they're being paid for doing so because they have such an outstanding and deserved user base. When you have 2.5 billion devices out there, there's a much sought-after audience, right? And the scrum that is Perplexity, Claude, Gemini, Grok, ChatGPT, Meta AI, you can cement your relevancy by making a deal with Apple. And that's why Google paid them to be their search function. We don't know the terms of the AI deal, but I think that Apple did fabulously on the whole package and now includes Gemini as Siri. I think the idea that Apple's, when I say as Siri, what I mean is that Siri's gotten much smarter. How about that? Apple is now, is it done? And there are no more improvements? That's what I kept hearing today. It's done. Well, that's just plain stupid. It's going to get better and better. No one's going to switch from this phone because they were disappointed by today's Worldwide Developers Conference, except for the hedge fund guys and gals who watched the show, our network, and said, oh, it's really bad. I mean, it wasn't even a tradable event, although people tried to trade it. And the traders are the losers, not Apple. That said, Apple's a leader, maybe the leader, and I don't want to lose the leader of this stock market. We've lost all the other mega cap stocks now. Forgive me for wanting one of them to keep winning, because I do think Apple could have gone higher on the same info we got today. I wanted it to open down and then rally. Finally, there's the equity issuance from Google last week. Now, I didn't see it coming. You didn't see it either. It was brilliant if you work at Google. Great if you place it at Goldman Sachs. You now have the money to build more profitless data centers to keep your cloud customers from going to another competitor, and that's what they're going to do. It's bad for everyone else, though, especially shareholders of Meta, Amazon, and Microsoft. The ease with which Google raised the cash was incredible. Goldman Sachs did a tremendous job. But if there's more equity issuance from the other companies I just mentioned, especially before the SpaceX IPO, then will the SpaceX deal be as well received? Won't maybe some of these people who want the stock cut it back? Could the next deal be the deal too far and the market literally runs out of money, as I've been saying for months? Remember, any large account that gets a lot of stock is going to buy more once it starts trading. That's kind of the official custom. Who knows what that will mean to the stock itself? Who knows how many articles and news reports there'll be about how stupid people are buying it because it doesn't make any money. Now, insult to injury, I don't know. Apple tonight, OpenAI announced that it filed its S1, so that one's now coming right down the pike. I was hoping there'd be a little bit of a respite there. Not for the weary. And how about SpaceX? Really? Okay, I am bullish on that. I think you can buy some and put it away for your grandchildren, not with market orders, and wait, don't buy the opening. It could take a very long time for some of these projects to come to fruition, obviously, maybe your entire lifetime. Personally, I think that's too long a time horizon, but if you're thinking in terms of future generations, I'm not going to quibble with you. Be my guest. That said, this deal is a bit fraught. We don't know what's going to happen in the next 4 days, and that can change a lot of things. We've now had the snapback from last week. I don't know what could propel us higher still. I do know that a lot of things can go awry, though. So rate cuts from the Fed are likely off the table. The SpaceX deal will suck money from the rest of the market. More hyperscaler equity offerings could do the same thing. And now Apple's getting its clock clean, too? That's more negativity than I can handle. Sure, maybe we run the gauntlet and go 4 for 4 positive, and that could make the market really roar. But the bottom line here is I just don't see it that way. I think the Fed's more important than anything, and it's now going the wrong way. I was hoping for reversal upward, not downward in Apple. I wanted to get any surprise equity deal over with before the big SpaceX deal, and I fear an insane opening for SpaceX IPO, followed by a horrendous decline, will leave a real bad taste in everybody's mouth. So I am not that bullish. My bullishness can wait. I think you will get a better time to buy than right now. Simple as that. Hey, why don't we go to Angel or Angel in California? Angel.
Yes, sir. Good day. Booyah, Jim. Thank you, sir, for having me on the show.
And I'm glad you called. How can I help?
Well, on a genius move, I ended up buying Cerebras when it first came out. Mm-hmm. Originally, I thought the stock was coming out of 170, 180. When I went to finalize this close, it was at 370.
Right.
And it has not been anywhere near that since then. So I'm wondering if this stock is a dead stock. Should I get rid of it? Today's the best it's been.
Frankly, I think it went up 36 points today, gave you a nice bounce back. I'd cut it in half, and then if it goes up anymore, I'd get rid of the rest. This was a botched deal. This is what I most fear, okay? They obviously misallocated. They didn't understand that the stock could open very big. They picked everybody off, and everyone who bought the stock in the last 2 weeks is underwater. And that's precisely, actually even 3 weeks, that's precisely what I don't want to have happen. And I tell you, I've done these kinds of deals. I priced them. I've been in them, and it was done poorly. And now I just heard Angel talk about how he did, and there are hundreds of thousands of people like him and her. And let me just tell you something. I fear that's what's going to happen this week. And it's going to hurt you. And I'm trying to protect you. That's all I'm trying to do is protect you. Let's go to CJ in Texas, please. CJ.
Hey, Jim. Thank you for taking my call.
Absolutely.
I am a new member of the club, and I watch your show, and I really thank you for the education we receive. And I'm a small investor, but I'm a very active investor.
All right. Remember, we're all small investors, and I thank you for the kind words. Let's go to work.
Okay, so my question relates to ServiceNow, NOW, and I've had it for 5 months investing in what I thought was a growth company that might grow a little faster than it has, and then the price plummeted. So I hear mixed projections about the future of holding ServiceNow, and it seems to be mostly a buy, but I'm interested in your thoughts.
Okay, well, look, it's expensive. That's the problem, and it's one of these companies that has a lot of software as a service, but it's been pivoting rather rapidly. I've been watching the stock, and I have mixed feelings about it, but of the stocks that are in the enterprise software business, I think it's better than most. Is that a lukewarm endorsement? I guess so, but then again, I'm not that bullish to begin with. Okay, sometimes your bullishness has to wait. I want to be bullish. It always feels great, but I'm not going to do that at your expense. It's not, to me, it's not the time to buy. Maybe it goes up. That'd be terrific. But to me, it's not the time to buy. All right. Now, on Mad Money tonight, we're continuing our IPO series with one that I think is a winner. It's called India Group. Does this new data center energy play deserve a spot in your portfolio? Conceivably, I'm going to crunch the numbers. Then the lower-cost retailers have been doing really terribly lately, but that doesn't include raw stores. I'm taking a close look at this all-price retailer, seeing why it's been doing so well lately. And not public, but digital identity company Socure just ranked number 23 in CNBC's Disruptor 50 list. I've got an exclusive with the company's top brass to find out more about its path forward. Maybe we can learn about the industry, even though we can't buy the stock. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.